The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. And before we get started with our program, we must mention that Saturday is Giveaway Money Day in Louisville, Kentucky. We have one of our favorite horses running for someone in the den called Mr. Z, trained by D. Wayne Lucas, the Hall of Fame thoroughbred trainer. So he's going to be about 50 to 1. Unfortunately, or fortunately, I don't know which, I happen to know the gentleman that owns that horse, and the horse has sore legs, so he doesn't give me much of a chance, but he is in Kentucky, and when you've got D. Wayne Lucas in there, it's worth a $2 win bet just to be safe, because at 50 to 1, you could buy yourself a nice dinner maybe in South Philly or someplace like that. But there is a horse for astrology. We have Danzig Moon coming in on the full moon, of course. And then we also have International Star, which happens to be my favorite. Anyway, folks, let's get back to the markets. The big thing today for me to look at, there's a lot of things happening. The big break in gold caused by the weakness in the dollar. But if we look at the dollar index, if you can see this chart, which is the ETF for the dollar index, we've completed the first major ABCD move since we started this move well over a year and a half ago. This is the first major one. It's taken us 6 weeks to complete it, and it's the same thing as if we looked at the inverse on the euro, which I posted as the first chart here in Tiger TV, and you'll notice that it's also completing that same type of a pattern. Whether that's going to continue on, to the downside or upside, we'll have to wait till the end of the day, but we'll have to wait and see. I was listening to Basil's show, and he talked about the VIX index, and folks, that VIX index, there is absolutely no one in the world is bearish stocks, because that VIX index, all it does is it takes out the previous day's high and really doesn't go anywhere. So, just keep in mind that that's something that really needs to get moving above 15 before the market shows any sign of bearishness. Now, today's low that we had in the markets, we had a beautiful 61% retracement. In the NASDAQ, we had a beautiful 786 retracement. In the New York Stock Exchange Index. So all of those are telling us that today's low is very, very important. And if we close really badly today, folks, this is going to tell us that we're most probably getting ready to go down. Now, remember, this is the last day of the month. Let's rephrase that. Tomorrow is the last trading day of the month. And the most bullish days historically are the last 2 days of the month and the first 3 days of the month. Oh, no, I got that wrong. It's the last 3 days of the month and the first 2 days of the month. Well, we've had two bearish days back to back, so we should be looking for the market to rally into the second of May. We do have a small Bradley date coming in on May the 4th, and so that will be, I believe that's a Tuesday, so we'll keep an eye on that, but we'll have to wait. See, the key thing is if we get below the 2078 level in the S&P futures, that would tell us that we're most probably getting ready, to head to the downside. But we haven't done that yet, so we need to wait. There is absolutely no fear in the market, which is that VIX index that Basil is such an expert at looking at. And until that gets above 15, I don't see any big move to the downside as of yet. I think one's coming because of a lot of the negative divergence that we're seeing in the transportations and in the utilities, and in also some of the other things that we're watching with the IBB. If you wanted to see, I know this is a commodity show, but someone's asked me to take a look at the IBB because it has a relatively bearish chart coming in off of the move, and as you can see, it's still cascading down far below the 786, which this had been one of the leaders in the market, and it is now, starting to be a laggard, which is one of the signs of a market topping. Remember, we have the Dow Jones Transportations and the Dow Jones Utilities are also making large divergences, which confirms the Dow theory that says we should be heading down. We come into one of the strongest seasonals that we have, which is sell in May and go away. Whether that is going to be true this year or not, but we'll have to wait and see. But we have a lot of things that have happened, that tells us that. We've had our first question about Apple. Folks, I mean, they had the most bullish news you could possibly get on Apple. They only have $200 billion in their coffers. And they're using $50 or $100 million of that for buybacks, and yet the stock is still it made a new high marginally by about $1 a share, and then has since sold off. And now we're hearing reports possibly that there's a problem with Windows. It might be that with their watch, with their watch that they have. So that's something that we got to keep in mind. I don't know if they're coming out with that 17-inch screen for the wristwatch yet, but I heard it's on the table. So that'll be an interesting product, once it starts to hit the stores. We'll have to wait and see here. We'll just wait and see. I think we have our first caller in. Oh, this was just a question, and that is the Dow theory. That basically means that if the Dow Jones Transportations and the Dow Jones Utilities do not make new highs within a week of when the Dow Jones Industrial does, that's a divergence and tells us that the market is inherently weak, because utilities represent the energy to make the products, and the transportation represent the shipping of the products, and that's supposedly what it's going to see. And as you've seen over the last few days, I understand some of the reports have come out that GDP has, slowed down a bit. So whether that's going to be a big case or not, we'll have to wait and see if that means anything at all. So we just want to watch that very, very closely. Now, I think the biggest problem that we have in the commodity markets today happens to be in the bond market. Bonds and notes, they look absolutely horrible. If you watch them on the chart, they should have held some major support. They have broken that badly, both in notes and in the bonds both. We had a triangle that we talked about last week forming in that, and we suggested that the triangles are usually broken to the downside, and as you can see, that's exactly what we've done. We've almost come down to a 61% retracement on the notes now, which could give us a little bit of support in here, but frankly, it doesn't look like it's going to be much, and it probably won't last for more than a few days, would be my guess. But we're almost exactly at the 61% retracement. Not quite. We've got another half a point to go in the notes, and we would be at a 61% retracement of our March 11th low. So those still look lower. Interest rates are going higher. They haven't told us that at the Fed yet, but the market has certainly been telling us that, ever since early April, when we made that 786 retracement up there in the Treasury note contract. So that's just another of the things that we're watching here, to see what's going on. The question that someone asked me was about the cattle market, and believe me, I wanted to have Rich Anderson on today, but Rich was busy. Cattle had a cattle on feed report last week that was actually came out last Friday, and it was a relatively bearish report. However, the market did absolutely nothing. It just basically has been in a lower highs, lower lows here for quite some time, and the market actually went up after a very bearish crop report, which means there were going to be less cattle than they anticipated. And yet, if you'll give me 1 second here, I will put this up here so we can all take a look at it. There we go. You'll see that we've had a pretty wild swing in cattle from 159 down to 137. We rallied back to the 61% retracement. We had a nice pullback at 143, and now we're just in a real tight trading range between 150 and 143 is what it looks like. Folks, in commodities, and this is our commodity show, it also relates to the U.S. dollar. We had a big move in wheat yesterday and the last 2 days. Wheat moved better than 25 cents a bushel, and when the dollar started to weaken today, the market just absolutely came unglued in the wheat market, and it sold off about 16 cents. It's since bounced back a little bit, but these are so susceptible to what's happening with the U.S. dollar. Most of these commodity traders are watching this type of thing, and when they see that occurring, that tells us that we're looking at something that could be, relatively dramatic. So that's why we're watching the euro so very closely in here, up at this 112.50 level. That's the 786 on the big move back. It's the large ABCD move, and that equates to what we're looking at in that UUP, which is the ETF for the U.S. dollar. So that's the first major ABC correction we've had in the U.S. dollar in a long time. It's taken 6 weeks to complete it, and if we remember the words of one of our fearless leaders, H.M. Gartley, that you want to buy that first ABCD correction in a bull market. And this is our first major one. We've had some smaller ones that only lasted a few days, but this is the one that has lasted over 6 weeks and has held up, relatively well in here. So we want to keep watching that, because that could be the key to a lot of these things that are happening, in the market. Now, I wanted to put up the VIX index. We are starting to take out the highs a little bit yet, but it's still way too early. The close today in the VIX and also the stock market is going to be what's most important, because if we close near the highs on the VIX and near the lows in the stocks, that tells us that we are getting ready to have some really big action, I believe. We need to get the VIX index above 15. We're trading at 1421 right now. So if we can do that, then the stocks have a chance, to sell off more. Our good friend Bill Ehrman alerted us to the fact that the 27th could possibly be a high day. So far, that has been the case. The market sold off, 1% or so, very little. And we need to see if we get more of a downside in order to see if this top is really going to be significant. We have a lot of divergences. There's no question about that. Not just the transportation and utilities, the banking index is diverging, and several others. That the IBB that we already talked about, which had been the leader, has really gotten hit badly. And so there are some things to tell us. And not only that, but Apple, everybody, that's the most widely followed stock in the world. I mean, they get so much free advertising every day on CNBC and Bloomberg. It's almost like they're running ads. And yet, with the very, very bullish news, and 33 of the 33 analysts on Wall Street are bullish, much like they were at 704 before it went to 385. And so here we have good news, and the market's lower. That's not a good thing. We've got to take a break here. Stock's a little lower, gold getting hit really badly, and we'll cover that when we get back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and we're taking a look now at natural gas. We had a tremendous move here in the last 2 days. Yesterday, 2 days ago on the 27th, we completed a butterfly pattern when we made new lows. It happened to be a perfect ABCD pattern over the time of the past week, stopping exactly where it should have at that 244 level, and it's rallied 30 cents in a matter of just a couple of days. That's a huge move, folks. That's equivalent to about $50 an ounce in gold. So that is a very, very big move in natural gas. It could signal, a major bottom in here. And we have a lot of people that are still bearish crude oil, and yet crude oil continues to edge higher. We've taken out yesterday's high, and it certainly has a chance that looks like it might want to go even higher. We don't know yet, but it's still quite early. Now, I wanted to get to the gold market here because gold and silver had a really nice move coming off of the Gartley pattern 4 days ago that we had mentioned. We got down to that 1173 level. We rallied all the way up to 1215, which was the exact, to the penny, 786 retracement of the high that we made back on early April. What this does now, it sets up another Gartley pattern coming in around the 1160 level. That's down about $16 or $18 from where we are right now. That would complete another ABCD pattern, and that's where there should be some final support here in the gold. I'll put this in so you folks can take a look at it, because I'll blow it up and then you'll be able to see it a lot clearer, because with some of these charts you'll see that it's some of them are a little bit harder to see. Let me blow it up a little bit more and then we'll see where we are. It's all related to what's happening to the U.S. dollar, folks. That's the way I look at it, because it's so sensitive to some of these things that you want to watch it. But this sets up a beautiful ABCD down around the 1160 area in the gold market. So that's something that we want to be watching if we get to that point. Now, silver, which has been bearish, has been far more bearish than anybody else, than anything else that we have. We'll be able to take a look at it, and we'll see if that's going. We have a question about whether gold will be a buy at the 1165 area. I'm basically looking for about $5 lower than that, about $6. But if you want it for the long-term play, then you can buy it at 1165 if you like. But it should hold 1160 to 1158. That's where the actual numbers come in. And with this large move down of over $30 an ounce in silver, that will most probably tell us that you should wait to make sure that this is it. Now, we have one more day to go, and so the market's most probably not going to reverse on a Friday. One does not know, because we do have a full moon coming in, but that's going to be over the weekend, so I would prefer to wait over the weekend and see if gold is going to hold that level. Silver has been much weaker all along. And it's just actually it's held up above the 786 this time, which is very unusual for silver to do that. But I still think we have a chance that we'll be able to get this silver just a little bit lower. Today's low was 786 in the silver. So this is the first time that silver is actually holding a little bit better than we are with gold. But we could easily see silver $1 lower, or half a dollar lower, down around 1550 early next week. With this wide range down like this, folks, that's one of the danger signals that you have when you're doing pattern recognition, because it's an unknown. You don't really know what's happened. And the high that we made in silver today it made a higher high than yesterday by half a cent. Come on, folks. I mean, rocket scientist doesn't have to figure out that that's not very bullish. And what was that? That was an exact 61% retracement of the high that it made back on March 25th. So this market looks like it wants to go lower. That just doesn't, when you can't take out a previous day's high by more than a half a penny in the silver market, you got big problems. So that's what's happened in silver and gold, probably related to the dollar. But that is, in fact, what's happened, and there's not much else you can do about it. But that's what it looks like from a technical perspective, that we are going to be going lower in both gold and silver coming into early next week. And then we'll see if we have, some major support, coming in at that point. Now, I want to bring up here the crude oil, because we have a big pattern completing in crude oil today, and you'll be able to take a look at that. It's happening now. We'll be right back after we take care of this. We've got crude oil up a little bit, gold down quite a bit, and stocks down a little bit. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, I've posted into Tiger TV the chart of the New York stock. First, I wanted to talk about junk bonds. You'll notice here the JNK, which is the ETF for junk bonds, has held up extremely well. It's selling off actually less than what treasuries are. Folks, I believe that this crisis that we're going to have coming is going to be debt-related. I don't believe it will be related to the stock market because the stock market will be affected with it by quite a bit, but the debt market is so far bigger than the stock market that that's where the real problem is going to happen. The timing of that, I don't know for sure. All I know is that it doesn't look very good here from a long-term perspective because we've been lowering interest rates since 1982, and that's what, 33 years. And I think we're going to see this turn around, and they've put so much money into keeping rates low that when they try to unwind this, it's going to be a surprise that the rates will probably go up a whole lot faster than what they might want to believe. So we'll have to just keep this in mind as we go through each day watching these things. But I believe the problem will be, in the debt market. Now we've had a big move today in bonds to the downside. We've broken sharply below the 61% retracement of the low we made 3 months ago, which is not a very good sign. In addition to that, we also have, a situation where The Treasury notes are just barely making a 61% retracement of that, and that's the bigger market. So that's the one you want to watch, because if notes get about 2 points below where they are right now, then that's when I think this real problem will happen. We're not really seeing any panic here, folks. Looking at the VIX index, nothing really dramatic is happening at all. So keep in mind that until that happens, you won't see a whole lot going on until that VIX index starts to move above 15 substantially, and then I believe you'll start to see it move. The key here is what we're watching in this dollar index, because the dollar index is basically 53% weighted with the euro, and the euro has been the strongest. It's the only currency that's strong against the dollar today. All the others are weaker. There's red marks all across the Canadian, the pound, the yen, the Swiss, the Australian dollar, the Kiwi. All of them are far cheaper than they were before, but the euro is still holding up extremely well, and that's because it's 53% weighted in the dollar index. So this is a key time for both stocks and bonds, and we'll watch them closely, as we always do. And with the long weekend, well, it's not a long weekend, but the weekend coming up, we do have a full moon coming in on Sunday, so that means we're going to have a really active Friday and Monday. And of course, with the Dow moving 100 points almost all the time now, that's not saying a whole lot. We will see a day where we're going to be more than 500 points down in the Dow, or 500 points up. I'm thinking it'll probably be the downside, because fear is a greater emotion than greed. The reason why you say that is we had our biggest move has been 330 points in one day, but we've had an intraday move of 440 points. So if you multiply 440 times 1.618, you're going to come up with 700 points. So you're going to see a swing in the Dow of around 700 points sometime in a 24-hour period, probably coming sometime between now and early until the equinox, which comes in on the 21st of June. So in the next couple of months, we're going to see some really big volatility. That's what the market tells us, because all it does is repeat. It either expands and contracts, and when it expands by 127 or 1.618. So 1.618 would give us a 700-point move in the Dow. And because markets go down faster than they go up, you can easily see that you can make as a case for it to go down rather than up. But we'll have to, to see if this is going to be the case or not. That's really what we're watching right here. We have a question about astrology, and the next Bradley date we have is this weekend. There's a small Bradley date coming in on May the 4th. That'll be over the weekend, so that I don't think that'll mean too much, but we'll have to wait and see if it does, have much of a meaning to make it hold up or not. We'll have to wait and see. That's really all we can do, and that's all we have to do is to wait, because nothing else we can do matters. We still have stocks are down quite a bit. Dow's down about 80. S&P's down about 10. The Nasdaq's down quite a bit. The Nasdaq's been hit the most, but remember, it went up the most, so it's probably the one that's going to have the biggest of anything happening. So we'll have to see what happens when we come in on Monday. It'll be pretty active no matter what. It was interesting. I do follow the German stock market, and it held up extremely well this morning. When we were getting hit hard, it was down just a little bit, and then it rallied over 200 points in the DAX, and made a couple of really nice butterfly patterns, and then an ABCD Gartley, and continued to work higher. So there's no fear crossed in Europe at all. Asia is still relatively strong. So this market is not rolled over as of yet, but that doesn't mean that it can't. It just means it hasn't done it as yet. Today's close is very, very important because of the fact that we hit those lows this morning right at the Fibonacci retracement levels that should have stopped. And if we break those, that tells us that we're going down to the next level. We need to get below 2080 in the S&P futures. We're about 9 points away in that, so that would tell us that we're a little farther away in that. So that's primarily what we're watching with that. The key here, I still believe, is the U.S. dollar. That's what it looks like to me. Whether that's going to be the case or not, we'll have to wait and see. someone asked a question, should they buy gold at 1165 or 1160? Well, if you want to own gold, and I believe everybody should own some gold and silver, yes, you should buy some gold and silver. I prefer to buy silver coins. Buy the $1.50 and quarter and 10-cent pieces that were pre 1964, and those are the ones that you want to have happen to keep, because I think someday they're going to come in. Oh, we have Brent from California on the line. Go ahead, Brent.
Hey, Larry, thanks so much for taking the call.
What can I do for you, my friend?
I wanted to discuss that cycle date we had on Monday. I took a small position short, and I have my stop above that high. I just wanted to get your thoughts on it, if you could.
Well, so far it's worked. I mean, it's it's down a couple of days, which is no big deal. It stopped right where it should have as far as support, but it could take it out very easily. So we really need the market to be down 5 or 6 days in a row before we would be sure that that was a significant high. But the fact that it came in at that high was pretty amazing, in my opinion, and it came in with the patterns filling in with the 1.27 in the NASDAQ. It was making a perfect ABCD up there at that 5,000 and change level. So, that's all I can tell you. It's a big date. That's all I know. It's really, really a big date.
Yeah, you look around, it seems like there's a lot of different things that hit their highs on that date. That's, like I said, I took a small position. I've got my stop right above. We'll see what happens with it. But,
that's the way to handle it.
Okay, that was my question. Well, have a great weekend, and thanks for taking the call.
You bet. And I believe we have another caller on from La Paz, Mexico. Priceline Charlie, are you there?
I'm there. I'm here. How are you, Larry?
I am good, my friend. How are you?
I'm recovering from a long trip.
I'm sure you are. Now, let me ask you a question. How was all the buying? Did you get all the good deals that you thought you were going to get?
Yes, I've got some very good deals. I bought some equipment, but we're getting prepared. We're looking at 4 cranes, same model, and it'll be set for May 15, the auction, so we're preparing for that one.
Okay.
And the part that on this trip that I noticed, I took actually a driving trip from Dallas to El Paso, Texas.
Uh-huh.
And going through places like Sweetwater, Odessa, and on Route 20 is where most of the companies, the oil companies, have their bases or their headquarters. And for many years I've driven, I never saw too many rigs, drilling rigs.
Mm-hmm.
Well, on this trip, I saw so many rigs on the side of the road. It was incredible. One place had like 50 drilling rigs. So if they're on the side of the road, they're not drilling anymore.
Wow. Well, that's going to be very interesting. Anyway, listen, we want to talk about Priceline, I suppose.
Yes, let's talk about Priceline.
Okay, I've put it into the room here. We rallied up and we made a double top from where we were, back in late February. So, we gapped up 5 days ago on some news, I guess, and we still haven't taken out 1267. The trend is still down because we've got lower tops, in my opinion. But, it's like going to go with the rest of the market, whether it's going to explode out of here or it's going to turn down.
Yes, there's one date to note. The earning date for Priceline is May the 7th, and it's before the market opens.
Next week, and that'll be on Thursday, right?
Exactly.
Yeah, that'll be next Thursday.
Right, exactly. So I think we need to kind of watch what it does, because the Priceline on the last time had a bounce up from that was not a great numbers. And this time they're very much at the top. And they have a way of, when they're reporting earnings, when they're on the bottom, they bounce it up. And we're on the top, then they bounce it down. So we're at a close couple of days to watch what the signal will say to us.
Well, that makes good sense, and I think the best thing to do would be to stand aside till after the earnings, and then you'd probably have a better chance of, taking a look at what's really going to happen, I would think.
Yeah, that's why I called to see what. But do you think the lines are trending still down, and we haven't broken through the 1267, and we have to watch that number carefully?
That's exactly what I think. I think and you'd be foolish to go in to the market and try to pick a top or something until the earnings, because the earnings in this stock that's $1,200 can really bang you around, and you don't want to do that. So I'd stay away from it, is what I would suggest you do.
Mm-hmm. I wanted to bring a kind of simple observation. I noticed that 1987 we had a severe market movement. After that, we had 1994 was a problem due to credit. And then we came up to, from 94, we came to 2001, which was the internet bubble. And then 2008, we had the housing. And does it look like we have like 7-year cycles? What do you think?
Well, 7 years is a biblical cycle for sure, but that is it's a very important cycle in all of finance. I mean, it's related to, I believe, the planet Mars, and I'm going on memory right now, which sometimes I shouldn't probably rely on it, but that's the one that I believe that it's related to. But there is a strong one. I remember I read your email that you sent me about the biblical cycle of 7 years, and if you go back and historically look at the business cycle, there's a 4.5 year, and that's very close to, if you had 4.5 times 4.5, that's 9, and if you give a little bit of leeway either way, you could easily come up with 7. But I try to get a little bit closer than that, but frankly, yeah, there's something in there at 7 years, that's for sure. Whether it's going to be really big or not, I'm not really sure, but we got to keep an eye on it.
Yeah, the thing is, the 7-year cycle from 2008, this is 2015, and it's been going up nonstop.
Yes, it has.
And we know that it's being manipulated, or it's being, and I shouldn't say, it's being supported by the Fed. So
I think manipulation is a pretty good word. I think you could use that without too much trouble, Charlie.
I just don't want to get sued or something.
No,
Okay.
They can't sue you when you have free speech. Remember that. That's a good thing.
Oh, okay, great. So here we are in 2015, and September has been the traditional, 9/11, and before that it was September. So September seems to play a key. So here we are, September 2015 will be an interesting time period.
It always is, for sure.
Mm-hmm. So thank you for your time.
Thanks for calling in, my friend. I always enjoy talking to you, and I like to hear what's going on in the auction market. So we appreciate your information.
I'll keep you informed. And by the way, I want to say something. Your information on YouTube, if you type Larry Pesavento, you want to get a nice education at your leisure, at your time, just type Larry Pesavento. You can learn a lot about the finance. And I do it a lot. I really, many times, I just watch it over and over just to get another point, another idea. And it's thank you very much for producing it and keeping it up. You put hundreds of hours into it, I can imagine.
No, I don't do any of that. That people do it. I've never used YouTube other than to click on one someone might send me, but I've never used YouTube, and I don't know how to put one in there. So other people have done it, and if it helps people, that's the important thing, and I'm glad that it did.
And by the way, that's into eternity.
Okay, thank you, my friend.
Thank you.
You bet. Okay, we're right back. We got them stocks are still selling off a bit, but holding up relatively well, and we've got crude oil still up on the day.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and we're going to take a look here. We've got stocks, the NASDAQ making new lows on the day, and the S&P is not too far from lows on the day. But if we take a look at this, you'll notice over the past couple of weeks, looking at this hourly chart, we've had some beautiful patterns. The butterfly pattern was made up at the top. We've had some nice ABCDs. And as you can see now, we're breaking below the 61% retracement of the low we made back on the 18th of April, 2 weeks ago, 11 days ago. So that tells us that we're most probably heading down towards the 786 retracement, down about another 8 points down to 2076. But if we close below that 2075 level, 2074, that's telling us that we're going to probably expand to the downside. I've noticed now that the VIX index has started to pick up and is making new highs on the day, which is usually a sign that stocks want to work a little bit lower. So we're watching this extremely closely today. So far, the high of the 27th is held. It's still too early to make that determination that this is the major high. If we get below 2070 in the S&P, I would certainly think that would be it. That doesn't mean we can't have some really strong rallies, because we're hearing news all the time about some of the things that the Fed wants to do, and the fact that they're worried about the fact that the economy didn't expand over this quantitative easing period. That's really interesting. They've been doing it for 5 years, and today they tell us that it might not be working. Hello, it's working for J.P. Morgan and some of these other companies, because they sure did well. I mean, J.P. Morgan paid $16 billion in fines, folks, of things they did wrong. You and I do that, and we get the padded cell. We get 3 squares a day. But that's not the way it happens in the world of the big banks. So that's really what we're watching here right now, is whether these lows are going to hold for the rest of the day. We still got a couple hours, 3 hours to go in the trading day, so it's still quite interesting. We need to close this level, and then we will close near this level. We should be okay for a little bit. We should be for a little bit more of a bounce. And believe me, this market will rally 10, 15, 20, or 30 points on a heartbeat, because there's still people out there wanting to buy. There's no fear yet. We've got to get this VIX index strongly above 15, and then you might start to see people begin to realize that maybe something is not right. We're seeing signs that in the market, the NASDAQ, the IBB, the banking index, all of them are telling us, the transportation, utilities, all these are telling us that we're having all kinds of problems, but the world is not seeing it the way we look at it. So just keep that in mind when you're watching these charts. We've got the gold and silver still coming into major support, possibly down around 1160 in the gold. We'll be watching that over the weekend, and again on Monday when we have our Monday show. Silver, we'll be watching that around the $15.50 per ounce level to see if that's going to hold. But I do recommend, folks, if you don't own any silver coins, that you really ought to buy some silver coins, because it's a way of holding bullion. You don't have to pay a big premium for it. It's recognized all over the globe. Everybody knows that it's 90% silver. They know how much they weigh. Some of them have numismatic value, which is good, but own some silver coins. The silver rounds that they have, the $1 silver rounds equivalent to the silver dollars, are really a great way to look at it. And they're very beautiful coins, and also the fact that they have a really nice numismatic value along with a safety, which I think we're going to need sometime before this debacle is going to be over. But we'll have to let the world tell us if that's going to be the case. So that's the end of the show today. Live every day in an attitude of gratitude, and may God bless.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
You're watching Tiger TV.